Yo, Banter fam, what's up, what's up, what's up? I hope you guys are all having a fantastic day at the moment. I do apologize for being half an hour late, as I actually worked my butt off this morning, making sure I can build you guys a fantastic show today, where I'm going to teaching you guys something amazing with your portfolio. You're going to love it. You're going to love it. When you see all of the stuff that is coming through today, you're going to love it, and it's going to help you throughout any time in the market. It's something I want you to print on your wall. It's something I want you to always have. So if I'm not there, if anyone's not there, this is going to give you something always to structure you, without even worrying about the FUD, without even worrying about the news, without even worrying about trend lines, without worrying about any of these things. It's going to give you a beautiful mind space of understanding what to do with your portfolio at different times in the market. And this is going to help you throughout a bull cycle, a bear cycle, and accumulating cycle. And it's a little trick that I learned along the way, which I actually forget at times. And I always come back to the original part that always made it work from the beginning. So guys, we're starting to get a nice green candle from Bitcoin. You can see we are still in the middle between our panic zone and our bear wall. And what can happen next? Let's quickly go through some charts, quickly go through some dominance, and then I'm going to teach you guys. I'm going to do what I love and show you guys my secrets and my tools. Let's get into it. Yo, Banter fam, welcome to all of our beautiful, amazing community. I love you guys. I appreciate all the support. Thank you for being dedicated every day and being a part of this fantastic journey with us. I am here every day. I will be here every day, through the good, through the bad, and I'll make sure that I keep improving myself. But main thing is to be there every single day for you guys. Now, anyone that's new to the channel, hit that like, hit that subscribe button. Make sure you're following all of our social medias. Follow me on Twitter, Sheldon_sniper, as that's where I can keep you updated on anything that happens in the market. Make sure if you are getting active in the market to be a part of CoinPanel. Guys, this is on the third viewer point of CoinPanel, and you can see that every chart that I do through TradingView every day, I do have it set up for you on CoinPanel as well. This is a way that I can communicate with you outside of the charts. Remember with this, guys, is under these zones, we got everything. We got investment watch lists for you guys. We got trading watch lists for you guys. We have the chart of the day. We have the BTC watch list. We've given you a package here that has everything. So if you want to be a short-term trader, you want to be an investor, this is where we are able to give you all of the information. And tomorrow, we're going to actually have the CEO of CoinPanel come in and actually show all the new and amazing features and what's next in CoinPanel and what are we actually trying to build it. It's not just a charting platform. It's something that can give you guys a helping hand throughout everything and always just give you a second view. Remember, it's a tool to teach you guys how to fish and to just give you some samples of someone that is fishing so that you can start to develop and understand your main skill. Now, let's jump into the charts and let's quickly go have a look and see what is happening in the market right now. We're starting to get a little bit of greenness, which is great. But we are, nothing major just yet, nothing massive breaking any sort of trends just yet. We do have the big panic zone and we do have the bear wall. And we know right now, Bitcoin's in a channel. It's in a sideways channel. We've been ranging from the low 30s to the early 40,000s, and we've just been hovering through that channel, and not much has sort of changed. Now, what we are sort of waiting for is we are waiting for the stochastic to hit its way to the bottom, and then we'll have the reset of the 8-hour, 12-hour, and daily resets. In that time, it would be amazing if we could be still holding this higher low point of view. Because it will just give an indication that we are getting a reset flow of the bulls and bears battling it out. But at least we're not getting the bulls the bears holding control as much as what they did in these previous ranges over here. Now, remember, this was that long range where bears were fully in control, and something changed that day. And you can see in the last month, as much as we want to see it or not, there's been a lot more buying volume than what we've seen for a while. You can see how big we got these big green candles that have been popping up. So something changed in this time. And we know that the full understanding of market cycle is once there's a big move to the downward side and something shifts and something changes, this is where patience comes in. This is where the traders fight out. This is where the TA struggles. This is where things struggle. But this is the calm down drawdown phase. This is accumulation phase for the next big move in the market, and something has shifted. And now we're basically trailing and we're sort of running sideways at this point. So I still have the big bear wall at 45,000, and I still have the big panic zone that's sitting in the early 30,000s. Very simple. I have some limit orders that are sitting in the panic zone, as I don't have any clear direction just yet on those. And then I also have alarms set on this 46,000 break, because if we break that, then I'm getting a clear indication that we're starting to change some sort of trend, and that's where I want to be triggered. So right now we're in the middle. I'm actually sitting and being patient, and this is where the time where let's rather learn some new things on what can, not what can happen next, but when something happens next, what do we do next? And we wait. Panic zone, I'm interested. Break of bear wall, I'm interested. And until then, right now, we are the allow of the market to be. I am not, and I big advise that to you guys, the community, is to not exhaust yourself out in this phase. This will always be the hardest phase in trading, always. It's always going to be the most tough time, and it's the most exhausting time as well. So I'm keeping all of this energy for the big, beautiful runs that this market knows and what we know it can do and what it has done many times in the past. I'm deciding to secure my energy and wait for these beautiful rallies and just understand when is it time to be trading and when is it not. You know, the actual true reality of it is 4 to 5 months a year you should only be trading. That's it. The rest of the time you should be either working on Hodl portfolios or these sort of things, which I'll actually show to you guys shortly. But that's the mentality of it. We shouldn't be trading, we shouldn't be trading 30% of a year, because that's the only time that the market really rallies. And then there is the time of sideways. There is the 3 months of downness. There's 3 months of sideways, and there's 3 months of rallying. And that's all the beautiful part of the emotion cycle. So there is still always the option of the depression phase. Will it make a lower low? We will see as we get. And that's why I'm waiting for panic zone to say that maybe we pop down to the low 30s again. That will bring depression to the market. It will bring, it will really exhaust and kill the guys that keep having hope on where we're going to move. And we know that that's a very important part of buying the fear and stocking up on these zones, which is great. And then we have the clear bear wall sitting at the top. Now, let's quickly go through dominance and let's have a look. Dominance hovering in the zone. I actually think it's going to go sideways for a little while until there's clear direction. A clear break to the upward side. I think dominance will start to make its way down at some point, because the altcoins have been quite hurt. But for now, I think Bitcoin's going to be quiet for a little while. We do have the interest news, which is coming out tomorrow, so that can possibly have an effect on the market. And then we will see, from the zone over here, when we start to get the direction change. Right now, we do have the dominance holding trend, and there's nothing really massive happening at that point. We have the USDT dominance, which is starting to make lower highs at this point. We're not going to jump to that full conclusion just yet. We're going to allow it to have some sort of time to go. But if this is a lower high, can we finally get back down to this trend and finally break the main money line? And this is the one that we've been waiting for. This is the line that we've had many tests on, and we now know this is the line. This is the line that's going to tell us when we're going to have a market breakout again, and we're going to have the bulls try reclaim where it is. This is the pure line here, very similar to what that line we had previously over here, where we broke out and we saw Bitcoin rally from 38,000 to the 69,000 zone. And we at that same zone again, where we have 1, 2, 3, 4, 5, 6, 7, 8, 9 tests on this line. So right now, we're a bit far from the line, which means we be patient. We don't do much right now. But when we get here, when I get that clear signal, that is my aping sort of point to, that should be the Bitcoin breaking that key level of the 46 to the upward side. And that will be my, now it's time. We're not going to get much lower, and it's time to sort of get in. So we are in a patience game, but this is where it sort of gets exciting, that we need to be, we need to be prepping in these times, and we need to be getting ready for the next moves. Now, just before that, I'm about to jump into the education. We did have a little pullback from the US 30 again. And it is fighting a very strong support zone at this point. So we are keeping eyes on the stock markets at the moment, as we do know they do have quite a big effect on the Bitcoin market. Now, there is one scenario where we're looking at the stock market possibly dropping another, 6% to the downward side. If the scenario plays out, we're pretty much looking at the scenario of Bitcoin dropping back down to the regions. Where's that chart again? There we go, to our panic zone. So that is definitely a scenario, and that's what we're ready if that does happen. Or we can look at, US30 now, it's creating another long wick candle. Do we finally start to break, get the higher high and start to reverse? Something like this can then form Bitcoin to break that 46K zone, can then get the USDT dominance to drop this line, and then we can actually start having some fun again. So at least we got a view of the whole market in general, what we're looking at. We know gold is exploding. We know silver is exploding. Everyone's jumping to the safer assets right now, and that's fine. For now, in this time like this, the best thing is to do nothing and just to wait it out. And in that time, let's start understanding. Now, altcoins at this point, dominance is in favor. Altcoins are, they're getting sucked at times. They're still playing in a range, but it's very similar. Altcoins making the same lows as they're making the same highs, and it's channeling the same way that Bitcoin's sort of channeling, just in a more aggressive way. They're doing higher percentages up, they're doing higher percentages down, and that's all that we can always expect from altcoins. And that is why I'm going to be teaching you guys now the portfolio structure and how we should be looking at things. Because if I jump on here, before I do go into the slides now of teaching. Now, going to very high time frames will always be a very successful way to be entering those markets. Looking at this and looking at the stochastic, which is a very simple tool that I think everyone should be using, and we're quite known of that now. But when these things have ever hit long bottom oversold positions, these were these long down areas over here. You could see how we always like to turn and how we start to get a good response at some sort of point. It obviously always determines on where your low was and where we bottomed and these sort of things. But if you go just on basic views of this indicator, this zone over here was this zone over here. That's where we rallied up to. Now we're back. We've been hovering in that zone for a while. We're hovering here. You look at the time before, it was in this zone over here. Bitcoin was sitting at $10,000. Before that, Bitcoin was sitting at $5,000. And you sort of go back to all the times on when this actually happened. And you can see there was tremendous amounts of gains always after that sort of zone. And this is on the weekly, and especially this big one, which is on the monthly. This is another massive one. It all determines on your patience. But, it looks at Bitcoin, the zones, the last time we were here, Bitcoin was $3,000 at these oversold sort of positions. If I show you on let's actually get the Coinbase one, so I can show you guys what we actually mean. But if you have a look, the last time we were reaching our $3,000, before that were $800, and you can see how powerful this little tool is, right? Now, we jump into the charts and we start looking at where we're at now. We have the monthly oversold, we have the weekly oversold. Now, when something is oversold like this, we do get into a choppy position. We do get into a zone where I told you they're trying to shake out the whole market and allow their emotions to sort of destroy the market. That's sort of where we're at these zones. But high time frame view, it gives you a picture on what you should be looking at and what you should be starting to do. Now, I've basically started off with these basic views that that ran, and let me actually see if I can get myself on here. Will it get me on? Let's see. Okay, not getting me on. Okay, cool. But as you can see over here, we got this portfolio system with Rand where we're saying, Hodl portfolio, a basic Hodl portfolio. In my opinion, a safe Hodl portfolio within crypto means the safest assets in crypto. You got Bitcoin, you got Ethereum, and you got USDT. USDT, it doesn't have to be USDT. I'm just using that as the example of a stable coin. That is your Hodl, that is your safer investments within crypto. Bitcoin and USDT obviously being the top of safe ones. USDT doesn't do anything at all. It is fiat, so obviously we are losing to inflation, and it is something that's been going down for the last few years, but it doesn't fluctuate and doesn't go crazy. And then you got ETH, which is a little bit higher risk, but it is still the king of alts, and I think ETH will be here forever, and I still think ETH will still be worth a lot more money in the future. We then have medium risk tokens. We like to call these the sort of 10x gems, where you got the basics of Link, you got Luna, you got DOT, you got Cardano, you got Solana, you got FTM, you got AVAX. Now, these are not the exact tokens that, let's see if I can get this off here. Now, these are not, I'm not saying that these are all those tokens that you need. I'm saying this is how you should start categorizing and start looking at your portfolio and the way it should be structured. You then have your high risk. Let's jump back on there, which is Super, which is Rose, which is Moon River, which is Axie Infinity, which is Theta, which is Astroport. These are all higher risk tokens. Now, what you should start looking at is, this is how a portfolio should be structured when we're in the right time of the market. Now, remember time. This is something I'm going to get into that's very important. Now, 50% safer hodls, 35% medium to 10x gems, 15% high risk tokens. This is a beautiful pie chart that you will always use, and it's brilliant. Now, the only difference is, when do I build that portfolio? When is the right time to be in that portfolio? And when is the time not to be in that portfolio? This is the true skill, because if you are in that portfolio and we're in a bear market, you're going to get crushed, because you still have quite a bit of risk that's sitting in, 10x gems get crushed. High risk tokens get absolutely demolished. And what I mean by that is the 10x gems will go down 70, 80%. Your high risk tokens will go down 90, 95%. Then you got your safe hodl. So you're sitting in a bear market with 50% of your tokens in in higher risk sort of coins. That is going to make a tremendous difference to your portfolio, and it's going to really make your portfolio sort of become this up and down sort of thing, where it grows a lot but also shrinks a lot at different times. Now, nothing wrong with this portfolio, but you should be building this portfolio at the right time. Now, let's jump in over here. Now, what I like to call build your portfolio. Guys, I've given you the view now, and let's actually bring this up here, of the stochastic RSI, right? Now, I just showed you guys what the stochastic has done within the last, let's get the shade up here. There we go. What the stochastic RSI has done in the last 10 years or 5 years. You can go back, you can go have a look. One thing that I've determined is you got 3 levels. You got the main levels of a stochastic RSI. You got a stochastic RSI under the 20% zone. This is the oversold zone, and this has always been the best zone on when to build a portfolio. It's quite simple. If you go back to all the history, ignore the news, ignore the FUD, simple indicator and a simple method that I'm talking about. It's always been that this is where you should be building a portfolio. So what basically made me view in that is, you want to build this portfolio, right? You want this 50, 35%, and 15% portfolio management. This is when you start to build that portfolio, is when the weekly stochastic is sitting 0 to 20% on the Bitcoin chart. When we have an oversold Bitcoin and it's sitting at these levels, is when you start dollar costing and you start building this portfolio in this zone over here at the bottom. That's when you start loading up and you start building it. Then what basically happens is, I've then made a second rule. And what this second rule is, you see how on the stochastic over here, how you got this 50 to the 65% mark. I want you to mark this on your stochastic RSI on the weekly. This zone is, think about it now. I've just diversified. I've just built a new portfolio, right? But that portfolio gets absolutely demolished if I don't learn how to start. At what point do I minimize that risk, and at what point do I take profits, and what time do I start laddering out or some sort of stocking? So what I did is, when the stochastic makes its way to the upward side and we start to rally and we start breaking into the 50 to the 65%, is when I'm going to now jump back to my portfolio, and I'm going to then say, okay, now my high risk tokens, everything is rallying. Everything is mooning. If Bitcoin's rallying, we know the alts are rallying. We know the micro alts are absolutely destroying, and they're doing crazy things at that point. But now I'm at that point where, when I'm at that 50%, it's time to start diversifying risk. It's time to start getting rid of that risk. So what I do in that time is I basically start to send high risk tokens back into my hodl portfolio. Now remember, your hodl portfolio is your true wealth, and it's something that it's either accumulating Bitcoin, either accumulating Ethereum, either accumulating USDT. That is your true wealth. So when we start getting to the levels of 50 to 65%, I want to change my portfolio structure. I actually want to get out of my high risk tokens, and in this range that we are in, I want to ladder that into my new safe hodl portfolio. So as you can see under that, when I get to the 65% zone on that stochastic RSI, my new portfolio should look like this. It should look where you have 65% now in your hodl portfolio, in your safe hodl portfolio, and only 35% in your medium tokens. So this may be a little bit early. A lot of people will sort of say, let's just get this off here. It will be too early, they say, because what happens, the alts start to rally and they start to go crazy close to those times. I don't care about that anymore. They rally a lot with Bitcoin along the whole journey. If Bitcoin rallies this whole weekly RSI to the thing, the last time I did it, I did 300%, right? Before that, if you look at the alts did 500, 800, 1,000%. By the time we got here, they were still 500, 600% up. I don't care about these higher zones now. When we get to 50 to 65%, I'm getting out of my small high risk tokens and I'm getting into my safe hodl points. So my new view will be safe hodl portfolio 65%, medium risk will then be that. So there's my zone, 50 to 65%. Then what's next? I then have my next zone. Now my next zone is this area over here where I got my 70 to my 80% zone. When my RSI gets to my 70, 80% zone is when I start a portfolio structure change again. What does this indicator give me now? It tells me now you need to start laddering out of your 10x gems and you need to start getting them into your HODL portfolio. Very simple. So what I start doing is I start diversifying my medium risk tokens and I start building them into my safe HODL portfolio. Now, a quick thing on this HODL portfolio. Guys, everyone's going to have a different view on what your HODL portfolio is. Mine simply is by the time a market cycle comes to a top, I want Bitcoin, a little bit of Ethereum, and I want USDT. In 6 months' time, when I get to my zone of build a portfolio again, then I'll diversify again. But at the end of a cycle, I want to be in Bitcoin, USDT, and a little bit of ETH. That's it. I can have 2% of my portfolio maybe in some Cardano, some of these sort of things. End of the day, these tokens are all coming out with ideas and they're not getting where they need to get just yet. They're not, you know what I mean? They're still building. These things are still going to take a long time. And I'm tired of waiting for them to. You know what I mean? I'm tired of them being so volatile. I'm tired of that sort of zone. So I know now what are the safest assets in crypto. And that by the end of the cycle is what I want to be in. So when we finally get to the zone of the RSI, getting to the 70 to the 80% mark, I start diversifying my medium tokens and I start getting into my safe HODL position. Then, what's next? Then we start to get to the 80 to the 100% mark. Now for me, on the weekly, this only happens maybe once or twice a year. Usually once a year it happens. It's take profit season. Now, what does a take profit season mean to you? To me, it means Bitcoin, Ethereum, USDT. That's what it means to me. Whatever your take profit is or whatever you wanted to build, what did you do this bull run for? What did you want to make all this money for? Is what, when we get to this zone of your take profit season, it means another portfolio change, which means when you get anywhere above 80% on your stochastic weekly RSI, I am going to the safest assets that I know and what I call are my safest assets. And that's where we get into the zone of I am going, this is my simple view of it, and this is what I'm doing on the next cycle and the next weekly top. When we get to the next weekly stochastic RSI to the upside, I'm going 50% of all my money into Bitcoin, 45% of it, it's actually supposed to be 35%, I've excused a little mistake, 35% of it into stable tokens, and 15% of it is going into ETH. That's what I'm building my whole portfolio for the remainder of the year, is for that little move at the end where I'm diversifying into those exact sort of tokens. And what that just means is now you never go, doesn't mean you got out of the market. You didn't get out of the market. I just went to the safest tokens into the market. That's it. And I also went into stable tokens too, because that is a safe, when we are in a very overbought position in the market, that is a very safe token to be in, is a stable token at that point. Then what it does is we then have a reset of the RSI. When we have a reset of the RSI to the drop points, as soon as we get under 20% again, I take this whole portfolio of mine and I start from step one again. I then take that and I take half of my portfolio, goes back into my HODL, and I leave it the way it is. And then I take 15%, I jump back into the high risk tokens. I take 35%, I jump back into my 10x tokens, and I start the whole rally again. And you see what it finally does for you, how it gives you levels where I set these alarms. These things don't happen too often. The last time we were clocked out like this was July last year. Now we're here again, and it's nearly a year later. So it's only 1 or 2 trades. Now, what did I teach you guys a few days ago was, let's actually have a look here, is I taught you guys this, right? I taught you guys long-term cash and TP. I'm going to teach you in the remainder of this week how to incorporate that. But this is my HODL. This is my long-term view. This is how I trade my long-term portfolio. Is when we get to certain points, I'm going into the safest assets. And when we get a restart of the whole cycle and we start again, then I know, okay, Now it's time to diversify back, and it's time to start again into that point. And this is going to teach me not to over emotionally attach myself in the market at points. It's going to give me a beautiful structure behind the whole damn process of it. And it's going to give me a set routine to do every bull cycle and every bear cycle. And it's going to prep me within both. And then what it does for me is we then have this basic view that that's all that it basically takes when it comes to my long-term views and my Hodl portfolio. You know, this strategy structures your portfolio through a market cycle. Doesn't matter where it is. This shows you how your portfolio should look at different stages in the market. At 0 to 20%, you should be building a portfolio. At 55 to 60%, you should be diversifying your high-risk tokens into your Hodl. When we get to 70 to 80%, you should be diversifying your medium-risk tokens into your safer assets. And then when we get to 80 to 100%, turn into whatever damn profits you want, if it's Bitcoin, if it's Ethereum, whatever it is. And then you have to wait for the whole market recycle to happen again. You have to wait for this whole big drop to happen again. And then when we get to the under 20% zone is when you rebuild the actual portfolio. So guys, you can see how beautiful this plays. And what I want you guys to do is, if you are playing with this on your chart as well, is to go take this and to go actually line this up with the money figure charts. Go line it up on a Bitcoin chart, on an ETH chart, on these sort of zones. Your intent is not to catch the full exact tops. It's to catch when we are getting to emotional greedy phase and to ladder out in that zone. And then as we start getting to extreme fear phase, to start building that portfolio, to start thinking. The only difference is when we do start to rally, guys, think about it now. Bitcoin's sitting at $43,000, right? Or not 43, 38 or $37,000 now. If Bitcoin now rallies to $60,000 within the next 2 months, if you don't run this structure and you don't diversify out into at least Bitcoin and USDT thing, you're just going to flow the whole market again. Like, guys, look at the actual chart and what's happened in the last year. Look at this. We had insane gains. We came all the way back down. We had insane gains. We came all the way back down. You know, can that happen again? Of course it can happen again. We can have insane gains again, all the way to the upside. And then guess what? We can come all the way back down. And you know what I mean? Like, if you can rather have that, I'm in here to make Bitcoin. That's my main purpose of it. I believe Bitcoin is the safest asset in crypto. You know, so is Ethereum as well, but Bitcoin way more, in my opinion. I get into other alts. I get into these zones, but they actually suck and they destroy me when I don't use them with a strategy. They are so much higher risk. They are very risky at those points. And if I don't have this full market cycle flow, what am I doing this for then? Am I here for a roller coaster ride, or am I here to make money? It's quite simple. So, you know, understanding this stuff and using this, print this, put it on your damn wall, because it's simple. What should I be doing at this point? Go look at your weekly RSI. If it's at the bottom, you should be building a portfolio. If it's at 50 to 65%, you should be taking profits on these assets. When it gets to this position, you should be taking it. When it gets there, you should be taking all of your damn profits and turning it into whatever you want. And then you have to wait. That's the simplicity of it. You have to wait. This is why we got to be funny on the show, and we got to keep it spiced up at points, because sometimes there's nothing to do. But the main thing is now the market's telling you should be building a damn portfolio. You should be diversifying your risk now, and you should be building this. Once you build this, it then moves into this zone over here. We get out of the zone. We then go into this zone over here. This is then what you do next. You change your portfolio from 50 to 65%. You then, from there, you change your portfolio from 70 to 80% again. And then from there, you take your damn profits, and then you wait. And then once you wait, you start the whole damn process again. And it gives you that whole beautiful view of what you should do. So print this. Just take it off there. So print this, put this on your wall, and you will always know what you should be doing. You want to be even better? Go do this on the monthly chart. Even better. If you do it on a monthly, it means you're only trading once every year to 2 years, but you'll be very accurate. You'll be really, really good, because you'd be rallying out. And it means that you're not going to catch the tops all the time, but it means that, let's see if I can make this a bit bigger so we can see how it played out here. But when Bitcoin rallied to these zones, you were already taking profits on your micro cap alts when Bitcoin is at 50K. It went to 69 after that. But when it was already sitting at 50K zones, you were already taking profits. I'm not saying you were taking profits on Bitcoin. You were taking profits on your small alts, on your 15% high risk tokens. You were getting out of them here. Then when we got to the region of the 80% mark, by the 50 to 60K mark again, in the zone over here, you were taking profits out of your 10x gems and your medium risk tokens too. You were taking profits. And then only at that point of the max top of the 80% mark or that zone, where you're then turning a percentage of it all into Bitcoin, percentage of it all into ETH, and a percentage all of it into USDT. And that's what you should be sitting in right now while you're riding out this whole big negative, what wouldn't say negative, but this bear cycle at this point. Imagine being in the bear cycle, but being in the safest asset you can be in crypto, even though they're coming down, they hold a whole lot better than all the riskier tokens. And now you would be at that point where by the time Bitcoin was sitting between 55 to the 60, 70K zone, you've diversified into your safe assets. And what would you be doing right now? You would be rebuilding and redeploying your assets straight back into the new portfolio of higher risk, medium risk, and then the safer play gems. So guys, this is something and I'm going to continue building on within the week, giving you guys rule structures. I'm then going to be doing this for traders as well. I'm then going to be doing this for all different views that you could be in the market. But I promise you, with that system alone there, I don't care what trend line, I don't care what it is. You just need to know when you need to do what and when's the right time you should be doing that. That RSI, it prints emotion. That's all that it does. It just prints that the markets are buying too much right now or they're selling too much right now, and it's overextended, and it's just giving a pure view of emotion on the actual chart. But now you have the view, and I promise you, you'll use this over the next 3 to 5 years of your journey in crypto. You'll be very shocked. My problem is I diversified too much and I had no structure with them. I store a whole ton of my link. I store a whole ton of my dot, which I love the tokens. I think they're going to do something fantastic. But I should have taken profits a long time ago. I should have diversified a long time ago. And then I came back like, Sheldon, what did you do in the beginning? How did you get your portfolio from this? You did this in the beginning. Why are you getting sidetracked now? Because I sit and I listen to Plan B, and I sit and I listen to these things, and I get sucked in the same world that everyone's getting into. And then it falls straight back to the simple mentality. This is what you need to do. You do this consistently, you're going to make a lot of money. So Banter fam, I love my teaching. Views a little bit down. I don't care. I'm here for the ones that want to learn and the ones that want to be a part of this thing. I love you all very much, Banter fam, and I'll see you all tomorrow. No. These people love it, but I'm saying views are down.
Oh.
From education.
Because you did education?
Views
are down because you did education?